Hello guys, welcome back to another Lumley trading video. In this one we are going to be looking at Upstart Holdings, ticker UPST, because it is one of the leading gaps today, being up around 20% as we're recording this video. So what are key levels we're paying attention to going forward, and just key levels in general that I want to be paying attention to? So what you would have noticed is over on the 6 hour, so again, yeah, 4 hour chart, but 6 months in general. The first time we come into this level, as always, again, if you've been watching this channel, you've seen any video on this channel related to technical analysis, we always talk about the same thing. The first time we come into a deviation, I'm turning short bias, meaning I expect a pullback. So if I'm long the stock, that's when I'm taking profits. If I'm not in a position, or maybe I flatten my position, this is where I'm looking to reverse the stock. And that's basically what we can see, you know. Markets opened, it pushed up to this level, a bit of hesitation, we pulled back. Again, if I'm, day trading, I've probably locked in the majority of profits, because again, we come back to the VWAP, that is the pullback. Now, my stop would be at break even, no matter where my kind of stop is, my entry is, and my stop would now be break even. And the reason for that is, at this level, you expect a pullback at the minimum. It's not going to say it's going to reverse. Again, we can never fully predict a reversal. Again, there's a good chance that there is, and that's why we hold some of our position. But that's why we do also have our break-even stop. So if it does come back up, cool, we'll stop at the rest break-even. And then if it breaks through, there is still another trading opportunity, because then all I'd be waiting for is it break above, come back to test it as a support, and if it can hold, then I'm looking to play to that next deviation. And where is that going to take us to? So that would take us to around $28.50, and we can see kind of right below that actually as well. At $28 is our first deviation over on the 1 year as well. So these levels are very close, about 50 cents in it. So really just use this as a range, meaning we're just not going to trade them so much as individual levels, but yeah, just use it more as a zone. A zone as resistance the first time we come through it, and if we end up breaking through, use it as a range or kind of a zone of support. Now, if we break that and we want even further targets to the upside, I'm paying attention to basically $37, going on to $45, and at an extreme push, $65. Now, they're the only resistance that I'll even note. Again, some of them, like that 65 so far off. The only reason deviations are kind of that wide is because obviously we can go back, about 9 months ago, before it had a massive dip on earnings. It was trading much higher, $160. We went down to a low of $12. When you get that kind of volatility, that kind of price movement, the deviations are always going to become really wide. So it really makes the lower levels actually a lot more significant than it would be, say, on something like a Tesla or a Nvidia, where they tend to be a bit more consistently traded. Now, onto the support side, what am I paying attention to? And really, this is a stock I probably won't touch to the downside, and the reason for that is $12, well, $12.30. That is our statistical mean over on the 6 month. What is our statistical mean over on the 1 year? The problem with that is that has turned negative. That's obviously negative $8. We cannot trade into the negative. So, for me personally, I never trade within the range of statistical mean, and the reason for that is statistical mean basically just means it's fair value, and if I'm a trader, I want an edge, and really there is no edge if we're at a fair value. Maybe you can do a straddle out of fair value, which could maybe be a potential play, but really if I'm trading outright shares, or if I'm just playing direction, really I want to be not trading within this range, because again, it's just, I think I'm taking a lot of risk when I can find another opportunity that has a better risk to reward and better probabilities of really just playing out in general. So again, yeah, to the downside, I'm not really paying attention to the support. 12.30 can use it as a level, so if I'm holding the stock short bias, really that would be my target, but really I'm personally not opening any positions as we go lower. But if you did want a level, obviously the 12.30, you're going to have the $12 52-week low, and if we break that, we only have one deviation at $4, which is our first deviation on the 6 month. Obviously, you can easily find levels between this range, because obviously we'll be at 52-week lows. If we break down to those kind of levels, it will just be looking at the key psychological levels. So, $10, $7.50, $5. You'll probably see some sort of reaction coming into those levels. But again, you're taking on more risk if you're playing this stock to the trying to buy the lows and sell the rips, whereas I think a stock like this, at least from how I trade, how I view stocks, they're easy just to catch to the upside when they kind of pump a bit, and just try and catch that pull back at the minimum, and if we're lucky, a reversal. Anyway, I hope you enjoyed the breakdown on UPST. If you did, why not drop a like and subscribe and check out this analysis video.